Hello friends, in last couple of videos we are discussing that overall bears are in a driver's seat and we can expect more downside in Nifty. Accordingly, we can see that in the last trading session bears managed a loss of about 140 points over the previous close, but the good part was towards the end, or to be very specific, after 14:30, that means after 2:30 p.m. a good bounce was seen that led to recovery of more than 100 points from the day's low. But if we see chart, then on the daily chart dozy candle formation can be seen. Now if we apply a short term moving averages 2 and 5, then somehow it is reflecting that last trading session high is very much crucial, and if at all by any means bulls are able to outperform, in fact even if they try to mark their presence felt, then we can consider that more upside cannot be ruled out and possibility of morning star is also there, but all depends on Monday's opening and closing values. Now if we apply Fibonacci tool, then about 50% of the last swing is been done and somehow bulls managed a close above that, which is really very fantastic work which they have done. Now if we apply Bollinger Band, then we can see that somehow the trend which was going on the upside, now it is trying to change its momentum and we may see momentum something like this. It is a hypothetical drawing that I have made and actual results may or may not go in the same way. Now if we still consider our Fibonacci tool, then as per this more downside cannot be ruled out, and as per this the next target or next level that bears may target is near to 17,400 or so. Last trading session close is near to 17,617, so bears may target about 200 points downside from the last close. Now if we see smaller time frame chart like 1 hour without applying our Bollinger Band or any indicators, then we can see that overall a structure has taken a downturn, and if we apply Bollinger Band, then as we had discussed or mentioned in our last video that Bollinger Band usage somehow should be avoided and we are expecting some adjustment as a oscillator hole in this, so RSI may not give us a true and fair picture. So again we are requesting that RSI usage should be avoided. Now if we apply long term moving average, then we have seen that again a close below 200 moving average, exponential moving average on a hourly chart has taken a place. If we consider 15 minutes time frame, then still more downside cannot be ruled out. The reason being simple that a long term moving average crossover has taken a place around 18,100, and after to that we have seen about 500 points, 600 points downside. Previously when it happened, it had given us a momentum of about 1500 points or near about level. I'm sorry, it is not 1500, but it is about 1000 points. So still long term moving average based crossover has taken a place, so we can expect some more downside from 18,100 to 17,100 as per our recent move that we have seen, but that was on a bullish side. Now bearish side momentum has taken a place, so results may vary. Now if we consider option chain data, then as per option chain we had said clearly that 18,000 we are not going to consider in our last video, and somehow that has proved its worth. Again we say that OI at lower strike prices, that is 16,500 and 16,000, should be avoided and should not be considered. Our eyes should be completely focused on 17,000 put option along with 17,500. Somehow bulls managed to give a close above 17,500 in the last trading session with some bounce in last 1 hour, but looking at the structure and the data and the additions in 17,000, we are able to see that somehow more downside cannot be ruled out. Now if we check call side data, highest OI is at 18,000, which hardly matters to us at present, reason being overall momentum is on the downside. But still one should be aware that as such we are having about 4 trading sessions to expiry. Accordingly, there are chances that if at all we see any short covering, then 18,000 may act as a strong resistance, but that will be bit far. At present momentum should be, or our eyes should be focused on 17,000 put, 17,500 put, their value as well as change in OI with overall OI structure as well. Only the reason being 17,000 is having a highest OI, and chances are very high that bears may drift down Nifty near to 17,200 to 17,000 levels as well on or before expiry. We may not see the levels on a closing basis, but volatility during intraday moves may happen that during these moves in a zigzag, sudden flashes on the downside may happen like what is been drawn, and somehow at a lower level trapping can be done. Likewise it was done in the last trading session in the last 1 hour move. Now if we consider max pain data, max pain data at present is at 17,700 mark, which is neutral at present and is comparatively in the favor of bears. Now if we check our PCR data, then PCR as per OI is at 0.41, which is oversold, and time being should be ignored as we are having a good momentum on the downside. Now if we consider PCR as per volume, then it is in the complete favor of bears, because the PCR at present is 0.80, which can be considered as a bearish tone set for the market. Now again if we refer our chart structure, then in the simple way what we need to focus in the last trading session happened is that a good bounce was seen on a last 1 hour move, which may get sold into again if at all bears manage this structure on a downside. So in the simple terms, last trading session high, which was near to 17,700, and last trading session low, that is near to 17,500, are a important hurdle, or we can say that the both side boundary is being made for the market participants. Any side momentum if comes may go in a fast and furious way, and chances are very high that we may see 100 to 200 points move on either side on or before expiry. Traders, please try to manage the risk and try to refer smaller time frame and try to book your profit in a quick succession. The reason being that this trend line which has taken a place, chances are very high that we may go more on the downside. At least as per this structure, chances are really very high that we may touch 17,500 or near about levels, which is our previous trading session low. moves near to that level, or open interest data with respect to the option chain strikes may play an important role. So whole in soul, again we would like to say 17,700 and 17,500 is a important boundaries set in the last trading session, which will be equally valid, or which will prove, or which will make a road ahead for bulls and bears for the expiry week of January series. We hope this video is going to help you to prepare your trade and to manage the risk as well. See you soon with another video. Till then, stay safe, take care, bye bye.